a 117% return in the last 5 years. You would have more than doubled your money. Man, I used to really believe that I needed a couple dozen stocks to build a strong foundation for my dividend portfolio. Boy, was I wrong. These 3 ETFs that we're going to mention in this video today can really change the way that you invest for the rest of your life, especially if you're somebody that doesn't want to look at the numbers and doesn't want to do any research. The dumbest person in the room can do this. You can be the dumbest person ever.
I'm going to be honest with you. I'm kind of retarded.
And I'm about to show you why they might be the only things you'll ever need to build long-term wealth and passive income. Most dividend investors just really want 3 things. They want income, they want safety, and they want a little bit of growth. They don't mind the growth. I'm going to show you why these 3 ETFs check off all the boxes, starting now. The first one on this list is going to be your core building block, the blueprint for wealth. If you just invested in this and didn't invest in anything else, you'd make it off all right. And this is none other than VOO, ticker symbol VOO. By simply buying shares of this ETF, you get instant access to 500 of the largest companies in America. And of course, these include the huge companies like Microsoft, Coca-Cola, Apple, etc. Here's why VOO is a must-have. They've returned 92% in the last 5 years. Look at this chart, guys. This is insane. You've almost doubled your money. Their expense ratio is super low, 0.03. You're basically owning this for free. They also include the top dividend payers and long-term compounders. And the ETF automatically shifts towards the top performing companies within the ETF. They're all structured by market cap. VOO gives you the safety net of the entire US economy. It's not sexy, but it's powerful and it works. And before we go any further, if this video is helping you out, go ahead and smash that like button for me like it owes you some money. It tells the YouTube gods to bless this channel and it might bless your portfolio too in the meantime. And it's free. I highly appreciate it. It helps my little channel grow. Let's get back to it. And the second one that we're going to talk about here is probably arguably the most popular, I guess, favorite ETF amongst investors overall. There's a lot of good ones, but this one definitely holds the trophy in my opinion. Is definitely one of my favorite ones. I like to consider this one a dividend machine, and that is none other than SCHD. Now, if you really want to talk about just getting paid and like having a set it and forget it button where you could just put your money in there and like sleep comfortably, don't have to worry about it at all. You won't have to sweat this out. The market could go up, it could go down. You could sleep in peace and collect your money. Almost guaranteed, right? This is as close to guaranteed as it gets. SCHD is the one. This ETF is a dividend investor's dream. In the last 5 years, they have a solid return too for the dividend income that you get from this ETF. You're looking at, look at this chart, guys. You're looking at 51% return over the last 5 years. They pay a dividend that fluctuates between, 3.5% to 4%. That dividend yield moves obviously with the price of the stock, with the share price. They're going to pay you quarterly, guaranteed. They're super stable, super safe. They focus on companies that have very strong profits and really strong balance sheets. So that's what gives people that sleep well at night feeling. You don't have to worry about a recession coming in. This is going to be a pretty solid dividend payer here for your retirement. The dividends are really reliable and they have pretty good growth potential. As you can see, they returned 51% in the last 5 years. This is nowhere near a bond, right? But it provides a safety that makes it feel like one. So, most payouts are qualified dividends too, by the way, which means, you get a little bit of a lower tax bracket on those. SCHD is not just going to give you income. It's going to give you the confidence of knowing that your money's going to come. Every quarter, you're going to get paid from SCHD. It's as close as it gets to guarantee. And again, this is not a sexy move. This is not something that's brilliant. The dumbest person could literally invest in this. If you want to have stable income every quarter and you want to have solid dividends coming in, SCHD is one that you want to put on your list. Sometimes people just get overwhelmed with having to look over stocks and you have a dozen or 2 dozen stocks that you're following and, oh, this one did this one did that. Let the ETF just do all the work for you. Just invest in one ETF and have all of that covered. If you want to build solid, reliable income every quarter without having to manage dozens of stocks, SCHD is a good move for you. And the third one that we're going to talk about here is also one of my favorites. I mean, you guys know that I'm a dividend investor, but I do love, I have to admit, you guys know me, I do love explosive stocks that are just going to run 150, 200% in the next 2 to 3 years. That's amazing. I feel like that could catapult your portfolio. And when you pair that up with dividend income, you get the best of both worlds. You have a solid, stable income coming in from your dividends that you could put on a drip, but you also have that explosive growth that could catapult your portfolio and literally change a decade of your life. It'll speed you up towards your goals with investing. And with that being said, we're talking then none other than the Triple Q. The Triple Q holds the biggest 100 non-financial companies in the NASDAQ. Translation to that is pure innovation. Let me tell you why the Triple Q needs to be in your portfolio. You instantly get access to the largest 100 companies that are involved in tech. By simply buying shares of this ETF, you're exposing your portfolio to the benefits of the AI companies, the cloud computing companies, the semiconductor companies. This ETF includes giant companies like NVIDIA, Amazon, Meta, The yield for the ETF is low, so it's not super attractive to dividend investors, but the growth potential here is massive, guys. And that's why I love it. And looking at this chart, look at the long-term performance here. It's completely ragdolled the S&P 500. You're looking at a 117% return in the last 5 years. Yeah, it does have a low dividend yield, I agree, but look at the explosive growth that it'll add to your portfolio. That's why I think it'll be a great idea to pair it up with a dividend portfolio just to give you that exposure for massive growth. And I say that to say this, the triple Q is not going to pay you today. I agree. I'm not denying that, guys. I know a lot of us, we love to see that dividend income come in every month, and we love to see that dividend income increase monthly as we reinvest our dividends and as we get the dividend raises. But the triple Q gives you the type of growth that pays you forever. So with that being said, what is the smart play here? You don't need to learn how to pick 30 stocks. You don't need to learn how to time the market and have the perfect entry to build wealth. All you need is these 3 ETFs to be the core foundation, the core building block in your portfolio. You're going to have VOO for strength and stability. You're going to have SCHD for that sweet dividend income that we all love. And then you're going to have the triple Q for long-term growth. Together, these 3 ETFs are going to give you a portfolio that's fully diversified, efficient, and built to last. These ETFs are the perfect trio for a very well-rounded long-term investment portfolio, in my opinion. VOO's going to provide you with that broad exposure like we mentioned. You're going to have the top 500 US companies. They're going to offer you steady growth and reliable market stability. SCHD is going to bring you that consistent dividend income with a focus on financially strong, time-tested companies that reward the shareholders. And then the triple Q, on the other hand, it injects that powerful growth potential by capturing the innovation and momentum of these tech giants. Together, they offer a perfect balance of income, safety, and future upside without needing to pick individual stocks. For the investor seeking both passive income and capital appreciation, this combination delivers simplicity, diversification, and long-term performance. So guys, to wrap it up in conclusion, this is not the sexiest strategy, but it is a strategy that works, especially for the lazy investor. If you're a lazy investor, you don't want to do any research on any companies, you don't like this, you don't like looking at numbers, just invest in these 3 and you'll be all right. Let me know down below if you guys own any one of these or if this video kind of made you think about owning one of them. I really like to know. I'd like to chat it up with you guys in the comments and see what you guys are up to. Once again, guys, thank you guys for watching. I will catch you on the next one. Peace.